Welcome to The Real Recipe, the podcast that brings you the perfect blend of real estate trends and topics, where we serve up fresh insights and sizzling strategies. So let's get cooking. What are we talking about today?
Today's
Today's exciting.
very interesting topic.
And this is literally the sexiest part of the real estate transaction.
Yes.
Title insurance.
Exciting.
Very exciting. Well, because you can't buy real estate without title insurance.
You could.
God forbid.
You could, but you'd have some problems.
There are people out there. Hey,
to do that.
I mean,
Are there? Are there people out there who
do you
actually-
see
do.
everything coming out right now with what Fannie Mae wants to do? You don't need title insurance anymore.
Because I don't find that to actually be something that's going to be relevant. I don't think that that's... If you're in New Jersey still and you have an attorney, no attorney is going to allow you to close to that title insurance.
I would never.
So,
So I'm the one that orders title.
Wait,
I'll
so
lose my
real
license.
quick. So real quick about the Fannie Mae thing. Why don't you
Yeah.
just do a quick...
I just briefly read the article that they're trying to
they're trying to push...
they're trying to push closings without obtaining title insurance.
Yeah, they're going to use an attorney opinion letter.
Yeah.
in
Well,
lieu of
they do that. They do that now, but they even
Right.
want to get rid of the attorney opinion letter.
Right.
Just get rid of title. We don't need title.
Blockchain.
But that would only apply to...
I was going to
lender's
comment
policy.
that, but that's our thing.
That's
Right.
blockchain.
That's
Blockchain.
that's Ryan and John's thing.
Right.
Oh, and we can include her.
Well,
That's
yeah,
fine.
since we're going to phase her out, she might as well be included.
That's true.
Right, got to give her a job.
Yeah, we need to.
I thought attorneys were phasing out in New Jersey, though.
That too. Well, down south you don't need them.
Yeah.
South Jersey, who cares?
That's
Nobody
next
needs an
episode,
attorney.
guys.
Oh, what a
Please,
tangled web we weave.
Yeah, but then we leave it in the hands of a realtor. And
Hey, here's a contract that we drafted. You should sign it. Don't even worry about an attorney.
Right.
Just get a title.
Don't read
company.
it. Don't read it. Just get a title company.
she's only been in the business for 6 months, and she's writing a legal contract for you.
Hence why we have attorney review. But that's next episode.
But she did 80 hours
That's
of education.
Yeah,
All right,
that's next
so-
episode.
Yes,
Listen.
today's title insurance and attorneys.
Well,
Yes.
next episode's attorneys, but right now,
Yeah.
title.
Title.
So why should I get title insurance? Why do I need title insurance?
So I think that most of the people who own a home truly don't even know that they have a title insurance policy or purchase one.
Or even understand it for that matter.
Yeah, it's just kind of this thing that you chalked up to part of your closing costs, and hopefully you had an attorney or a lender.
I'm spending a couple $1,000s for this. So what is this?
Right, but hands down,
I don't even get that question.
the most
Well, I do.
expensive
Yeah.
part of your closing costs are going to be escrows if you're getting a mortgage and your title insurance.
Yep.
So
Hey, what about my fee?
Let's not talk about
I'm trying to highlight that, right? Wow.
What about my really
You're like,
expensive
wait, you're like, wait, no,
loan
I'm
origination
I'm
charge?
expensive too.
Yeah.
Application fee?
But it's different because it's not, obviously it's not something you shop for necessarily, and that's almost like a common misconception we'll get into.
Yeah.
But I don't think that most people, even if, we talk to clients and realtors all the time that have been in the business for 30 years, and they don't know what
They don't
title
understand it,
insurance
yeah.
is.
Yeah.
And it's not just title insurance anymore in New Jersey, it's mostly title and settlement too. It's almost like this package deal.
Which is great for me.
Yeah.
Right.
I don't want that liability. I don't want to disperse funds. I don't want to
Right.
act as settlement.
So what is, just very generally, what is title insurance? Like what's the...
There's like three components to it, I think. Is you have the title searches, the title insurance, and then you have the settlement or escrow services. So
Yeah.
for the most part, title insurance, it's just different than every other type of insurance. Most people think like car insurance or homeowners insurance or health insurance, which is like a liability insurance. You pay a monthly or yearly or one-time premium, and you're insuring against future loss. Title insurance is different because you're paying a one-time premium at closing, and I'm just going to be specific to purchase work here or refinances, but you purchase a one-time premium at closing, and that it's an indemnity policy and it protects you against prior loss. So as a buyer, I guess like the most simple way to put it is I'm a buyer and purchasing a home. I want to make sure that what I'm purchasing is actually mine and there's nothing that's going to challenge my ownership in the home. And then moving forward, the only financial obligations I have are my own, my mortgage and whatever other debt, judgments, whatever it might be, assessments I choose to incur on the property. But anything prior to me, the person I'm purchasing from, the seller, or even prior sellers, those items all need to be resolved prior to me purchasing and closing on the property. Otherwise, they can become my financial and legal obligation.
Well, and there's two types of title insurance, right? There's your lender's policy,
Right.
and then there's your owner's policy.
Right. So
And then you have your regular policies and your
Right.
enhanced policies.
there's three different types of
And you
policies.
always
You
get
buy
the
an
enhanced policy.
I feel like there's
No, there's
a lot
no
of
under-
innuendo.
I'm
there are
going
no-
on
redirecting.
there.
there
I'm
are
redirecting here.
zero
Yeah,
undertones
I don't know.
here.
I don't know. I
It's-
don't want to.
I don't even opt for the regular policy anymore.
Yeah.
You just always get an enhanced policy
So-
for my clients.
With that, there's 3 different types of policies, and specific to New Jersey, you have the enhanced policy, you have a standard New Jersey policy, standard policy in New Jersey, and then a refinance rate or recast rate. There's no like reissue rate in New Jersey here anymore. It's just a different rate, and the rates in New Jersey are set by the New Jersey Title Insurance, Bureau, and then also Department of Banking and Insurance work hand in hand, and they create a rate manual. So this whole shopping for title insurance is really not a thing. It's a service-based
I was gonna say,
business.
at the end of the day, you're shopping for the service.
No, but
But
you
you're
know
not.
what?
But as a consumer, you don't even know how good their service is.
Well, but you don't
unless
even
I
know
refer
like
you.
what you're shopping for
Right.
as a consumer,
Well, right,
right?
you
Like
have no idea.
if I tell a customer you can go shop around for title insurance, they're gonna be like, well, I don't even know
Where
what
do I
title insurance
start?
is. Like
Right.
what am I
And
buying?
that's why all my
Yeah.
clients, for the most part, I'm like, I have a relationship with the title company.
Yeah.
We'll order title through them. I said, I give them the option,
Right.
like you could, quote unquote, shop around, but there's nothing to shop around for. The fees are regulated.
Right.
The premiums are going to be the same across the board. You have some leeway here and there.
Leeway
with,
here,
like,
but just
but it's like minimal.
But in general, the New Jersey Land and Title Insurance Rating Bureau and the DOBI set the rate manual, and that's inclusive of everything.
Right.
So it's what the insurance amount is based on the scale of the purchase price, and you pay based on the purchase price. Whether you have a lender involved or not, we have simultaneous issue in New Jersey. So if you purchase a $500,000 home or whatever it might be, or a $1 million house, I'm going to say $1 million house, your title insurance premium is going to range from like $3,600 to around $4,300, and you're paying that whether you get a mortgage or you buy cash.
Right.
Simultaneous issue, you pretty much pay a $25 endorsement with your title insurance fees, and they issue both
Yeah.
policies at the same time, whereas other states, you have to pay for a lender's policy and an owner's policy calculated separate, which can obviously be very expensive. They're issuing both at the same time. So for a client, and they set the standards for what you can charge for settlement, all fees, like if you're charging a $35 wire fee, it better be because your bank
Yeah.
is charging a $35 wire fee.
Yeah,
You
not
can't
just
pad
28,
fees.
35 bucks.
A lot of these costs are pass-through
Right.
costs, like searches. So there's going to be hopefully, very little wiggle room for different costs, like overnight fees
really
and
should be, yeah.
copies and things like that. But you're not going to see, no title insurance company is going to say, yeah, we charge $1,000 less because our premium
Yeah.
is less. It's
Yeah, no.
just
It's all the
not-
same. It's everything-
It's
the price
all
is
the
all the same.
same.
The only client that will not even question, but the only client that'll be like, oh, I have a title company, is someone who's a savvy
Right.
real estate investor who's like, look,
Sure. Yeah, I've run into
either they're in
that.
commercial
Yeah.
or they're
Yeah,
in
yeah.
residential, but they do a lot of work, and they're like, I've worked
Yeah,
with
it's
this
not something
company
you
for
shop around for.
years. If
Yeah.
I was referred to this person by someone else, right? But for the most part, I don't get clients that question why I'm using Real Safe Title.
Yeah.
I have a great relationship with them. They are
Yeah.
amazing. Back office is amazing, and I don't have to worry. And
Yeah.
2, 3, 4 of them used to be my paralegals, and they're awesome. So like,
Yeah,
I have,
right, yeah,
I
yeah.
trust them doing their job. So it's like,
Yeah.
I can do my job. I don't have to
Yeah.
worry about like back office. I don't have a title search. It's been 2 weeks. I know in
Yeah.
like 3 to 5 days, unless the county's backed up, I'm gonna have my search,
Right.
Yeah.
and I'll be able to review it. And
Well,
So back to
So
what
let's
you
go
were
back
saying,
to title, because you've got two real
Right.
policies. You're getting a lender's policy and you're getting an owner's policy.
And that can get confusing
Right.
too. But again,
Well, because I think that's what most people want to know. Like
Right.
what is a lender's policy that protects me giving you the money,
Why am I paying?
Yeah.
right? And
to
what
protect
is
the
the
lender?
owner policy? Because they are
Well,
different.
and it also covers different values.
Right.
Different, well, in different aspects
Yeah.
of your purchase transaction, right? The lender's policy covers me as the lender giving you the money.
Correct.
That
Based
if
up
I
to-
ever
to the
if I
loan
ever
amount.
foreclose or something were to ever happen with the property, that I'm protected, that I get my money back, or that you as the buyer get your
Not
don't
get-
have your mortgage impacted in any way, right?
Right.
So
I was gonna
it's
say that's more
again,
what it
both
is.
parties are making an investment. I'm a home buyer. I purchase a one-time title insurance policy at closing.
And real quick, that's the other question I get.
Yes.
Like, it's $2,500. Like, I have to pay this every year because
Right.
they automatically assume,
Yeah.
just like every other insurance
Mm-hmm.
that they have to pay, it's an annual or monthly charge.
Yeah.
I'm like, no, this is a one-time fee.
And the enhanced policy too is different from the standard policy because it actually grows in value over the next several years.
Right.
Whereas the standard policy, if you buy a $500,000 home, you have protection for $500,000. There's
Not the appreciation.
There's no appreciation.
Right.
So
That's on an owner's.
That's-
on the
that's-
owner's
On the
side.
owner's enhanced
owner's
policy.
Yeah,
enhanced
yeah.
policy.
Right.
So I'm a homeowner. I'm purchasing a property. We get out of attorney review. Attorney orders the title searches. Title company reaches out to the searchers. All these searchers are essentially vendors for different title companies in conjunction with what we can search. We're doing
And a searcher goes down to the public records.
but
They
then
go to the records room and they're like,
a lot of
literally.
I mean, a lot of it's
a
online
lot
now.
of it's online now too.
Yeah, I know, but you know what I mean, like old school,
Right.
that little
They
files.
would have to do that back
And
Or
then.
they-
fiche, right? They're on the fiche.
And they've created some backlog too, just from doing like they might have searched this home before.
So it's already in their
they're
system.
creating their own database, so to speak. They do upper lower court searches, judgment searches, lien searches, which is like a mortgage or any other type of lien that would attach IRS lien. Most people who sell their home have an open mortgage, and it's not something to be concerned
Right.
with, or a home equity line of credit.
Yeah.
They're searching who the actual legal owner of the home is.
Right.
Sometimes you get a search back and there's no judgments or liens or anything like that, but there's deed restrictions. Tells you how you can and cannot use the property that people need to be aware of, or if it's a divorce situation or an estate situation, who's actually legally authorized to list the home. You have one person who might sign the contract and they're like, oh, my ex-husband hasn't lived here in 10 years, but we pulled
Right.
a deed and
Yeah.
he's still on title. So
All the time.
it's
You see
relevant
things like
and
that
it
all the
matches
time, and
file.
now the closing that was supposed to happen 30, 45 days is
Right.
like 90 days.
I know.
Because now you
I
need to
know.
track
Crazy.
this guy down, get him to sign off on the deed, and he's like, oh, I'm not signing
So
off.
and that's ordering.
Pay me.
Right, ordering.
Pay me my money.
And it happens.
Pay this man his money.
And it happens. So that, any sewer, water assessments, like, are they
Yeah.
up to date on their property taxes?
Wetlands.
Wetlands.
Tidelands.
Flood search, things like that.
Flood search. That's
Tidelands
one of the
claims.
biggest things for me. Just getting the order in ASAP. This way
Right.
I know whether or not the property is in a flood zone.
Mm-hmm.
Most
So-
of the time you know, because the seller, if the
Yeah.
seller has a mortgage,
There's some indicators, yeah.
sometimes they'll provide you with their policy, their deck page, right? And like, here, go
Yep.
shop around.
And
Then you know if you're buying in an area that's most likely in a flood zone down the shore.
right.
You know,
But up here,
You have some areas.
in northern New Jersey,
Some
it's
areas.
some areas you don't know.
Little Falls.
If it's an estate sale, there's some more specialized searches, like a surrogate's court search, or if it's a bank owned or previously foreclosed property, a chancery abstract, which is going
We
to
just
pull,
had to do that.
the actual foreclosure information and ensure that everything that was supposed to be included
That
in
it
the
was
foreclosure
foreclosed correctly.
Everyone was
foreclosed
put on
correctly.
notice. Everyone was served.
Right. Everything's been.
Now, is that more expensive?
So
It's an added charge.
it's an added charge because it's a search.
But from
it's-
a title
No.
insurance standpoint, right? We're not
no,
charging
it's
extra
just
for
It's
that.
just an extra search that has to be done. So all these findings come back, and if anyone's ever looked at like a raw title search, it's hundreds of pages of documents that our office receives, and a title examiner goes through them and interprets those findings, and it gets typed up into a title insurance binder or commitment.
Which is completely different. Like if you do
Right.
a present owner search and you get that spit
It's
back,
just 100
it's
pages
just
of
100 pages of
documents.
documents. So like
Yeah.
if a client's like, hey John, can you order me a present owner search on this property
Right.
because I want to, flip
Yeah.
this. I want it's off
Yeah.
market. Yeah, sure. But then we get the search back and it's just the search, 100 pages, and we're going
Yeah.
through it. Whereas, when you
Yeah.
guys type it up, it's nice and clean. I have the requirements, the exceptions, and I can see what's what. If there's any restrictions, declarations, anything like that.
And it's also not a complete search too, because a present owner search is only going to go back to when that current owner purchased the home.
Right.
When most title insurance companies might go back 30 years to underwrite.
What's the
and
most I'll go back? 60?
We can go back
100.
pretty far.
Yeah.
We can go back as far
To
back
wherever
as
the
we can.
records
It
end.
just,
Back to the
but
dinosaurs.
it just depends
Prehistoric.
how long you actually
Back
need to go
to
back
to
based
Phyllis
on
in the
evidence. Right.
the records room.
was
She's
the-
still there, by the way. In some of these small towns, she's still there.
The library. What
The
was that
tablets
called?
that have
What-
been
no, what was that
chiseled.
called? What was that system called?
The Dewey Decimal.
Dewey Decimal.
Yeah.
You'd have to go into like the little drawer and pull it out and like scroll through.
Yes.
Yes, they don't do that.
Oh,
anymore.
that's in box 3, section 7.
We have someone we keep in retainer like for those special files, and she's like, oh, like a new file that I have to dig through. It's like the cobwebs are on
Yeah.
everything. Someone needed a deed a couple months ago for, and this was not something they were actually even purchasing. It was like a family issue, and we had to go back to 1800s or something like
Yeah,
that. So it takes these. So again, it depending on how
And there's
long.
restrictions
sometimes you have
that
to go
date
to-
back to the early 1900s that are handwritten in cursive that I'm
Yeah, you
looking
can't read
at.
it.
You can't even read it. So I'm like, I don't even know what the hell the restriction is.
Yeah.
But I see something about horse and buggies in there. Swear to God, that comes up all the time.
Yep.
There are some of the restrictions that are in there
that are ridiculous. Yeah.
Well, that underwriters will choose to purposely, just omit because they don't fly
And
anymore.
yeah.
Some of them are,
So
very
there's
exclusive.
So there's one thing that I think we should touch on before we wrap this up is owner's policy, because I know for me, when we do our disclosures,
Right.
and this is what trips everybody up, and I know
Absolutely.
exactly what I'm going to tell you, right?
I know.
It reads on the disclosure. It says owner's policy optional.
Optional.
And every
Well,
it
why
doesn't
am I paying
happen
for
all,
this?
It doesn't happen all the time, but you
No.
get people who will call me and go, "Why am I paying $400
And it's optional.
Right.
I'm like,
do I not need to take
you know,
that? Do
you
I
know
want
what
to take
my answer
that?"
is as the attorney?
No,
It's not.
It's not.
Well, I know that it's
optional.
not. I get that it's not, and I,
I mean,
understand
it
that it's
is
not.
because you can say I don't want it. That's why
Right.
it's optional.
But
But
take a
from a
minute-
legal perspective,
But
Yeah,
when does
take
it-
take a minute
well,
and explain
right.
what does the owner's policy
When did
do
this
for
actually happen? So anyone who was in the business prior to 2015 was used to the HUD one statement, and we still use it now for certain cash
commercial
and
stuff.
commercial
Yeah.
investments. But prior to that, you had a HUD statement, and they weren't listing that on there because of the financial crisis in 2008 and the Dodd-Frank Act and stuff like that. The Consumer Financial Protection Bureau came out with the Tyler RESPA disclosure, which is the closing disclosure, is the closing statement we use now if you're getting a mortgage. The buyers and sellers closing disclosure. And what it was meant to do was create more protection and visibility and more transparency for the buyer, because they would get to closing and get their HUD and they're like, what the hell am I paying all these fees for? I don't know what any of these are. And lenders were throwing on last minute charges. So now what happens is when you do
not Ryan,
the shady ones.
easy. Jesus.
When you give
Right,
them,
like,
when you
oh,
give them their
hey.
loan estimate, you have to disclose, obviously, to the best of your ability, their closing costs. And since we've had that in 2015, two things happened. Most of the attorneys who were doing settlement were now allowing the title companies to handle the settlement piece of it, because it really made it impossible for sole and mid-sized practitioners to do what they do, getting back to clients' contract negotiation, contractual obligations, and then handle settlement,
And
because
handle
it was
settlement. It's just a lot.
an insane investment for software and technology and time. But
for the fee. And again, the liability. It's
Right.
not worth it.
so it's better, I think, for us to be the settlement agent, because when a client pays for their policy, you're not waiting for an attorney to cut a check and mail it to us. You have protection from the time you close. But when they get that closing statement and it says optional on there, that was just part of that transparency. And again, I think out of all the years I've been doing this, I have had maybe a few clients say, I don't want this, and I always give them my bit of it.
The owner's policy.
The owner's policy.
This is why you should have it.
Right.
Yeah.
And
So
then if you
you
still
might
don't want
have.
it, that's your business.
But correct me
decision.
if I'm wrong. The owner's policy doesn't. It has nothing to do with me as the
No.
lender. It's there solely to protect you as the
Yes.
buyer, or you as the
Use the homeowner. Use the
Yes.
homeowner.
right, and protect your
The market
equity
value.
Well, your equity
Again,
in the home, right? So if there were somebody, let's say a transfer happened, interfamily transfer happened, and there was a family member that wasn't part of that
They were
should have
left
been
off, yeah.
that were left off for whatever reason, because that that never happens,
Right.
and then all of a sudden they show up and say, hey, where's my
That's
where's
the
my
story.
money?
Yeah.
That's
Right.
what title insurance protects you against. Things like
Right.
that.
The owner's policy.
Well,
Yeah.
but the lender too, because
Yeah.
the lender wants protection because they have a
Sure.
significant financial investment. They don't want their lien status challenged also. So undisclosed errors, things that were filed or not filed correctly in the county, because the title company pulls these searches. But if something's
Yeah.
not recorded,
Yeah,
that's what
yeah,
the title
yeah.
company's insuring, is their search.
Yeah.
So again, something like an undisclosed error, fraudulent documents, things that did not come up in the title search, that's what the owner's policy protects you against. I mean, from truly, again, I make a joke that it's like a boring part of the transaction. No one really thinks about it, and it's more in the background, and we're not as consumer facing as the lender or the attorney
Yeah,
are. And a lot
right.
of it's getting filtered through the attorney, which is
Correct.
great because I can explain this to the client. But it's the one thing that actually matters the most in the transaction, because if something challenges your ownership in the property, or you don't have your deed recorded properly, you don't really own the home at the end of the day.
Right.
So you
Right.
need that's the peace of mind for the client.
Right.
And again, of all the years I've been doing this, I've maybe had a few clients who were like, I don't really want that. I give them my bit, and then I tell them, talk to your attorney, and
Yeah.
after that conversation, that's
All right,
They-
yeah, so
they're
that's
like-
fine.
because
they
you're
don't
never
even
going to let
think
them
about it.
Yeah, because he's never going to let them close
A-
without an
a
owner's
good
policy.
I
attorney
mean,
would
if
know.
they, I wouldn't, but if they're like, John, I don't want it, I'm like, all right, send me an email, tell me that you don't want it.
Yeah,
That email
if you're
gets
like at
saved.
closing and they do that, I had one client out of all the years who did that at closing. They were really insistent. They got on the phone with the attorney, and the attorney's like, I can't talk them out of it.
Yeah.
They close, the title company or the settlement
Get it
company
together.
records your deed, and then you receive your original deed back after it's recorded in the county, along with your title insurance policy. I've never have someone really, if a client calls me now, I think at this point in my career, if someone calls me and they're like, listen, I don't want an owner's policy, before we even really get started, I will kindly turn that client away, because I know the risk.
You don't wanna be on that.
I
Yeah,
don't
you don't
want to
wanna be on
be,
You don't wanna be on this
because
side
at
of
the
it.
end of the day,
Yeah.
if there's a problem, even if it's for like, some incorrectly calculated sewer assessment, which has happened from the township before. It's a lot of these things are still done manually in the township.
Well, that's because the towns
So,
are still
I know.
manual. It's so
it
crazy.
happens,
Archaic.
but I will kindly turn
Yeah.
that client away because I know the risks,
Kindly.
and it's not worth it.
So kindly do it.
I don't want to turn any
In the
clients
most lovingly
away,
of ways.
Yeah.
but I know that it's just a potential problem waiting
Yeah.
to
Right,
happen,
yeah.
and it's not worth it.
Sometimes the best deals are the deals you don't take.
Right, and that is,
Wow. Sage advice, people. Sage advice.
I think
Do it all the time.
Listen.
I do it all the time.
that the shop.
Like, I don't like turning away business.
John,
No one
No,
does.
but-
John the Oracle.
I think you have to, if someone really doesn't.
Yeah.
Again, if it's an investor,
Yeah.
there's been investors who have called and they're like, "Listen, I don't do owners policies." And I'm like, or surveys. I don't do owners policy survey, and I'm like, you know what? I just
I don't
Yeah,
get
you
title
need an
insurance,
attorney
but,
now at the end of the day, because
Yeah.
it's not. And a
Yeah.
lot of times these people don't have an attorney, and I know we'll talk about that next episode, but I can tell based on who. Like, we get a client based on who the attorney is, that I never get questions about title insurance when I work with John. I've never had anybody question it, and the
because I
clients
think
always
when
get
I-
a survey.
When I have an intake call, that,
Yes.
like, and we'll go over this in the next episode, but like when I have an intake call with a client, like we touch on title insurance, and that's part of the call.
Right.
Yeah.
And it's not like a 30-second like gloss over. We talk about title insurance.
Yeah.
Yeah.
And I do
You
the same
need
thing
it.
too. When I do a
have
pre-approval,
to.
and I do go run through fees.
Yeah.
Yeah.
It's
It's
the
part
same
of the-
thing.
it's
Like,
part
hey,
of the
this title
transaction.
insurance, and this
It's
is what you're paying
important when
for.
the lender does, because a lot of
Right.
times a lot of the lenders don't, and then the client will get their preliminary
Yeah.
closing disclosure,
Yeah, like, what are all
and
these
they're like,
fees?
what the hell are all these fees?
Yeah.
Because a lot of times lenders will disclose just the lender's policy and the absolute bare minimum on their
None
LE.
of the search fees.
None of the
nothing,
search fees.
The settlement fee.
I mean, if they're not sure, a lot of times a lender will reach out and they'll say, hey,
Shady.
can you send me a quote just for disclosure, because I want to make sure I'm not under disclosing for this client.
Well, right, too, because then
that's
that
how
puts
it
you
should
in a
be
bad
done.
position. Like, you don't want to under-disclose, because then you guys have to.
I actually tell people,
Come out
like,
of
I
pocket.
actually over-disclose.
You sh- and
and
you
and I
should.
tell
You
them,
should.
like, more often than not, it comes in lower.
Right.
What would you normally tell clients is like a realistic percentage of the purchase price in terms of closing costs?
2 to 4% is very fair, and
Right.
obviously it's less as you go higher.
Right.
But 2 to 4% is
Yep,
normal,
that's what I
right?
say
And,
too.
and
Yeah.
and I subscribe to the idea that I'd rather over disclose
Sure.
to you and tell you
Absolutely.
more, and I'd rather come back to you and say it's going to be less
Yeah.
than
I'd rather you get to closing, and
Yeah.
your closing costs are 2% less than what we
Right,
usually
or
charge.
like no, it's originally it was supposed to be 12,000. Now it's 10.
now it's 10.
Hey, high fiving everybody.
Right.
Instead of hey, I'm going to show you 6 and it's 12, right? And then
Right.
you're like,
Which I've seen that before.
yeah, right.
And
You're freaking out
nobody
about it. You know?
benefits from that, because I mean, we see it all the time. People are like, oh, I only charge $700 as an attorney fee, and then they have like $500, $600 of charges in there, or
Itemized charges of mailing, disbursements.
Right.
Right, wire fee.
same thing
you know.
with the lender. And we talked about this last week, because I had that one lender who was like, oh, my title insurance company will only charge you the insurance.
That
And
was shady.
this, in closing, I guess I will say this, depending on what state you're in, and I'm going to again be specific to New Jersey, things are done very specifically here.
Yeah.
So if you're not licensed to be a settlement agent or do title in the state of New Jersey, or if you are, but you're based in Maryland or Virginia or whatever it is, it's different here.
Yeah.
There's very strict regulations, and people don't understand sometimes when they're working outside of the state how things are done here as from a disclosure point of view, from a fee point of view.
Well, they get swayed by
Yes.
somebody from the Midwest who gives them an appetizing rate, or gives them an
Right.
appetizing
Well,
fee
if you
breakdown.
go with certain certain
Right,
companies,
and
they're
you
like,
look
well,
at
we
that,
also
you're
have
the
a title
consumer,
company.
you don't know. You're
And
just
then they
looking
get
at
to
that going, oh, this is like
closing.
$1,000 cheaper. Why
Right.
wouldn't I go with them? You
And
know,
then they
but
get to
it's-
closing, and the lender's like, "Oh, I didn't realize that we also had to order a tax search and this. And by the way, these things cost money."
Yeah.
And the client's like, "This is $400 worth of search costs that you never
Well,
disclosed
that,
to me."
that happens a
Yeah.
lot when I
Yeah.
do New York, because New York, you have like, we don't do this in
Right.
Jersey, but you do municipal
Yeah.
search. Like, we
Mm-hmm.
do this all the time on our
Yeah.
banking deals, right? You do municipal searches, street reports, like. So
Yeah.
if you're not familiar with the
Violations and
local,
stuff,
yeah,
yeah.
violations. Like if you're not familiar with like the local practice, there's things you miss. And again, we'll touch on the attorney perspective, where people miss things all the time when you don't have an attorney. Like,
Well,
things,
just so you know too, like if I don't disclose it correctly, and this is what gets
Mm-hmm.
shady sometimes, if I don't disclose it correctly, I have to eat that
You
cost.
have to cure
right.
that cost.
Yeah, you
Yeah, I have to
Right.
do a tolerance cure.
Sure.
So
which
it
I've
can
seen
get
before,
expensive.
not
It
from
can get
not from
expensive.
you, but like other lenders have
And that
undisclosed.
happens. And then when that happens, a lot of times we'll get a call from that lender and they'll
Hey,
say,
can
"What can
you-"
you do on the title invoice?" I'm like, "Absolutely nothing, because you didn't disclose
Right, it's not my
the
fault.
owner's policy, so I can't take $400 off
all
the
you had
owner's
to do,
policy."
all you had to do is
Yeah.
call me, and I would have
Yeah.
given you a prelim
Yeah.
invoice, and you'd have all my charges on there.
Right.
I know.
I do it all the time, right? I'll call Jackie up and I'll be like, "Hey, this client just wants to get a better understanding of what their title costs are going to be on this deal.
Right.
This
Yeah.
is their loan amount. This is the purchase price. Give me everything. Send it over." And I'm like, "Look, now if you truly wanted to shop it around, like that's how you shop it around. You take an invoice and you go
Right.
to another company, but they're basically going to match up.
Yeah,
So you
yeah,
should go
yeah.
with the company
Yep.
that I have a great relationship with,
Yeah.
right? Because it's just going to work a lot better. It really it
Who
is.
you work with matters.
Well,
Who you work with matters.
But so real quick to like really wrap this up, on these deals, any purchase, I mean, whether it's residential or commercial, you're ordering title basically once that contract is.
You need title insurance.
You need title insurance, but
You need
you order the title once the contract is out of attorney review or once the contract's fully executed, right? Title company gets the order, send it over to the attorneys.
Yeah.
Buyer sells attorneys. We review it, make sure from our perspective as the attorney, my client's protected on the buyer side. There's no, even though I know they're doing their due diligence on their side to make sure
Yeah.
that they're giving clean title, I'm doing the same thing because I want to make
Mm-hmm.
sure like they don't miss anything or I didn't miss anything.
Right.
Listen, title is there. Title is there. It's insurance, just like any other insurance you're
Yeah.
gonna have, and it's there to protect you.
Right.
Yes, it's costly. I
Ryan,
totally get
Ryan
that.
works for a title insurance company. That's what he sounds like.
Yeah,
I know.
but it's necessary though. Like you know what?
It is.
It's the same thing with anything in life. With when you have insurance, you hate paying for it, but when you need it and you got it,
You're
happy you have it.
You're so happy that
Right.
you have it.
Right.
That you're not because like
Yeah.
if you don't have an owner's policy and you're paying for somebody an heir who's coming to you for equity,
well, they step
and
in.
you're paying right. They
You're
come
not
in. They step
talking a
in.
few $100s.
No, you're
at
talking
all.
$15,000-$20,000 for an
No,
attorney.
I mean, what's a
ton of money.
litigation attorney's
Right.
retainer, at least from my
5,
perspective?
10 grand,
and
a
my
minimum?
firm- Oh, minimum 10.
Yeah.
Minimum 10, 5 to 10, but I would say more closer to 10 on something like this, like a
Yeah.
a title issue.
But it's
yeah.
just insurance. It
Just-
stinks to pay it,
It's just
It's just insurance.
but it's just insurance.
You're
but-
just a doorman. Like that's what you just sounded like.
I know.
But
you
no,
need it.
it's,
But
you
it is
need
something
it,
that you do
and
need.
I would never let my clients close without it.
Right, and it's there to protect me as the lender. It's there to
You as
protect
the
the
homeowner.
borrower as the
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 homeowner.
buyer as the
Yeah.
homeowner.
Right.
You know, there's reasons for it, and it
But-
may seem costly, but in the end,
It's not.
It's costly when
Yeah.
you don't have
You
it.
don't have it.
Absolutely.
So like we were saying, you get your title,
Mm-hmm.
search, everything's clean, we close, you guys act as settlement.
Right.
Meaning you handle the disbursements, you
We
get
do the
wires,
closing
you do the closing
statements,
statement, you
we
get the
pay
wire for
everybody.
Yeah,
the
you do a
bank.
lot of administrative stuff on a
Yeah.
on a transaction.
But that's where the back office comes in, and they're amazing. So like you have Joe and you have G, you have all these people that are
Right.
very good at their jobs. They do God knows how many closings a month, and
Yeah.
they're working with you and your team to balance the closing disclosure,
Mm-hmm.
sending that out to everyone, making sure we get to the closing table. And then what happens? You guys wire the funds to the title company. Title company acting as settlement disperses all the funds at closing, right? They make sure everyone gets paid. They take care of all the payoffs
Yeah.
to the existing lenders, right? They send
Sure, there's
the seller the check, they send you your check,
Commission
right? It's
checks.
they're taking care of all like the
That's
stuff
why
I don't
it's so
want
dull
to.
because they're just doing all this
But-
stuff.
and we
behind-
really-
They're
we
just
don't-
they're doing the
insurance.
paperwork behind
Yeah.
the scenes.
We-
But no, but then once all that's done, the biggest piece is making sure, right? The biggest piece of this
Yeah.
to make sure you actually own the property.
Right.
They record the deed. They get you the lender's policy and the owner's policy.
I think customers,
That's
I
it.
think borrowers, buyers, they would be shocked at how much work actually happens behind the scenes that they never ever
A
see.
tremendous
Right.
amount of
Never
work
ever even
happens.
are even aware of
Yeah.
that actually has to happen behind the scenes for you.
There's so many hours when you break it down to what goes into working
Yeah.
on a closing for a title company compared to what fee is actually taken for it. Settlement is not a moneymaker for title companies in New Jersey. It's
No.
just something you have to
It's
do.
like a pass-through.
It's
Yeah.
just
You have to do
it's
it.
just you have to do it because
yeah.
you know we take on that liability, and I think it works better that way sometimes as opposed to having an outside settlement company.
Nah, it works, yeah.
The whole benefit to having someone that you work well with is you have like 1 or 2 points of contact. You can't do it all, but there's more fluidity. So it's just one. And again, the client doesn't really honestly see us until closing, and part of the job as a settlement agent is we'll close wherever. So we have
Yeah.
close in one of our
Yeah,
offices,
Close at this,
broker's office,
this office right here.
a bar,
A bar. Been there.
Bar.
Been there.
their house.
We love closing at bars, by the way. So
Oh.
just
Absolutely.
who doesn't?
It's. I mean, it goes right into like a great celebration. I mean, it's the perfect place to close.
This is a
Or
highlight
or
of
not?
John's
Yeah,
year.
it is.
We had the closing
It
before.
is.
No, so end of the day, get
Title is
insurance.
necessary.
It is.
It's a necessary evil.
And next time we'll talk about a little bit more about the reasons we need an attorney, especially in New Jersey, and
Yeah.
that this plays into that. But
No, absolutely it does. I think it goes hand in hand. We all play a very intricate role in the process, and we all play off each other. It's important for when there's a lender involved.
you work with matters.
Yeah, no, I think it does. I've worked with people who I haven't worked with before, and I can tell you those deals don't go as smoothly as when I work with Jackie, Ryan, and other people that we work with on a daily, weekly
Oh, we've been
basis.
doing it long enough now where we like trust each other. Like I don't even need to.
Right.
Like,
Oh, I don't trust you guys. I just
oh yeah, right. My
well,
bad. Right.
we always say like you don't. People who worked in the business 30 years, they don't know everything. You don't need to know everything. You
No,
just
right,
have to
nor do I
have the
want to,
people
yeah.
who know.
right. I don't need to have the
everything about
answer
what
for you, but
they
I
do,
have the
right.
person who has the answer for you.
Exactly.
When my
Right.
clients ask me questions, right?
Absolutely.
I have 99% of the legal answers for you about real estate transactions, right? But when it comes to any other questions, well, you got to talk to Ryan about that. You need to talk to Jackie
Right.
about title, Ryan
Yeah.
about the your loan costs or what you can do with your deposit, But yeah, no, get title insurance, and I'll make sure you do.
Get an owner's policy.
Get an owner's policy.
It's not optional.
It's
not optional.
It's optional.
Do it.
It's not optional, but it's optional. Not
It's
optional.
optional.
Not optional. You got to do it. So
All right. Till next time.
Guys.
that's
In
a
the books.
wrap.